Bajaj Twins under pressure after Bajaj Finserv Alliance partnership ends. Bajaj Finserv and promoter companies will acquire Alliance's 26% stake in life and general insurance businesses. Sources tell CNBC-TV18 that Bajaj Finserv is not looking for a new partner and may look to list both entities in FY27.
IRCON and NBCC both trade higher on the back of order wins. IRCON's JV bags an EPC contract worth 1,100 crores, while NBCC has won an order worth 45 crore.
Aditya Birla Real Estate climbs more than 3% after Birla Estates debuts in Pune with a luxury residential project with a revenue potential of 2,700 crore rupees.
GCPL is the stock in focus after Goldman Sachs has come out with a note on the stock with a price target of around 1,300 rupees. The stock ahead of the company's meeting with investors as well. The stock is up almost 3.5%.
PB Fintech rallies from lows as the management clarifies on their plans for healthcare business. Speaking to CNBC TV18, Group CEO Yashish Dahiya says PB Fintech will not be the long-term driver of the healthcare project. Also says the primary objective of the venture is not profit. Instead, it is in growing insurance penetration. You're watching us here on Chartbusters. Great day for trades. The Nifty up 250 points, 800 points, 900 points higher for the Sensex. Mid-cap and the Nifty Bank doing extremely well. You're watching us live from the CNBC TV18 Motilal Oswal studio. I'm Manglam Malu. With me, Hormaz Fatakia. Hormaz.
Very good day. Continuing from where we left off yesterday, right, Manglam, and crossing important levels as well on 22,750. But is there more upside? We'll ask Shilpa Raut of Prabhudas Leeladhar exactly that question. Shilpa, good morning. Thank you for joining in. You know, we've crossed an important hurdle at 22,600. Is there more upside towards 23,000 now? And your stock recommendations as well for the morning.
Good morning and thank you for having me on the show. Yes, yesterday when we spoke about, we were discussing that above 22,600, Nifty should move towards 22,800, and then we are almost there. From here, I believe the strength in the market is such that 23,000 levels cannot be ruled out as well. And talking about Bank Nifty definitely 49,500 is the next stop, and if it holds there, you should see 50,000 to 50,200 also coming in few days. Individual stocks, I have two buys. The first one would be a buy in Policy Bazaar. Policy Bazaar with a stop loss of 1361 should stay long. 1400 call writers, we see that there's some sort of unwinding happening. So from here, 1440 should be the next targets. The other one would be a buy in Muthoot Finance. Muthoot Finance also has given a brief, a small breakout above 2300 zones. As long as it is holding above that, we can see levels of 2345 to 2380 coming.
Right, Muthoot Finance and PB Fintech is the call coming in from Shilpa. Thank you so much for joining in, not ruling out an up move towards 23,000 on the Nifty as well. Let's get you some more ideas for profit coming in from our colleagues at Money Control Pro. Anand Chaudhary joins in.
So today's stock idea is TBO Tech Limited, a leading global travel distribution platform where travel agents and travel management companies can book flights, hotels, car rentals, cruise, and many more packages. We are positive on TBO Tech due to rising outbound travel globally. Young first-time travelers from countries like India, Indonesia, Brazil, and China, they often rely on offline travel agents for their complex bookings. These travel agents lack the necessary infrastructure to manage their clients and the extensive inventory database. TBO also solves payment issues by enabling suppliers to be paid in their local currency while allowing travel buyers to collect payments in their preferred currency. TBO has an existing base of large buyers and suppliers and plans to expand it further. With network effect at play, a large buyer base attracts higher supply, which in turn helps in the even higher number of transactions on the platform. GTV generated by buyers in their 6th and 7th year is 5 to 6 times higher than the first year, which showcases the platform's ability to retain buyers. TBO has a huge operating leverage to play as there is zero marginal cost for new transactions due to technology automation, which allows all the incremental benefits to flow directly to the bottom line. So due to very niche business model and no listed peers, valuation of 44 times on FY26 earnings appears reasonable to us.
All right, with that, we'll take a short break. On the other side, we'll be joined by the management of Signature Global. Rajat Kathuria, the CEO, joins in to discuss the company's growth plans. There has been a recent initiating coverage by Nuvama on Signature Global with a target price of 1436. What's the business prospect? Rajat tells us.
Welcome back. It's a good day for the benchmark indices, where the broader markets are not very far behind. There are plenty of movers within the broader markets as well. Nasdaq, the top gainer on the Nifty 500 today, 11.5% higher now on the stock at the highest point of the day. Midcap IT has been taking a battering in recent times, and the stock seeing a bit of a rebound now from there. 11% higher for Nasdaq. Netweb Technologies, another midcap IT name, 8% higher on that stock as well. And of course, Ola Electric did not have a very good day in the office yesterday, but has recovered most of those losses that it had in yesterday's trading session. 9% higher on the stock as well, back above the mark of 50 rupees a share. Some flashes on your screen as well. Engineers India, the PSU stock that has won a services contract worth around 253 crores for the Numaligarh refinery, and that stock too has seen a bit of a spike after that order win. We take a short break. Back on the other side with the management of Signature Global. Stay tuned.
The market continues to do well, and the real estate pack is actually back in focus. We recently heard from Niranjan Hiranandani this morning. There was an update that came in from Aditya Birla Real Estate as well. The stock that is on our radar is Signature Global, as the brokerage firm Nuvama has initiated coverage on the stock, a buy call with a target of 1436 rupees. The firm cites the company has built up a robust pre-sales momentum among other factors. So to discuss all of this and more, we have Rajat Kathuria, who joins us now. Rajat, always a pleasure speaking with you. You know, brokerages are bullish on your business right now, but the question we ask always, this year you'd given us a target of 10,000 crores in terms of pre-sales and 6,000 crores in terms of collections. Every conversation that you've had, you were fairly confident that you'll cross that 10,000 crore mark. In fact, almost 12,500 to 13,000 crores is what you'd said you'd achieve in pre-sales this year. But collections of 6,000 crores, you may fall short on that target. We're just about 15 days away from this quarter getting over. How much shorter of the 6,000 crore will you fall on collections, and how much above the 10,000 crore will you go on pre-sales?
Yeah, Mangalam, good morning to you, and thanks for reiterating, the same question you asked me last time. So, Mangalam, see, to put things in perspective, if you look at our this year's of, the year is about to close expected performance vis-a-vis the previous year, we are seeing a very good spike, both in terms of sales and collections. So if you look at the sales, pre-sales effectively, we were around that 7,300 crore mark last year, and we'll cross, let's say, 10,000 crores this year. So which is effectively more than a 35% rise in pre-sales, which we are achieving. As far as collections are concerned, again, there's a very strong spike vis-a-vis the numbers we achieved last year. It's possible that we'll probably not touch 6,000 crores, but, if you look at with perspective to previous year collections, I think there's a strong, hike in that collection number. And the other very simple correlation between the two parameters is that most of our sales are happening on construction-linked plan. So both the numbers tend to move up in tandem. It could always be that, collections happen a month or two later because there's a wide spread of customers whom you're dealing with. But the broader trend is that both pre-sales and collections are looking very healthy.
Rajat, good morning. Thank you for joining in. But that still does not answer our question, right? That Mangalam asked. How much of over 10,000 will you cross for pre-sales, and how short will you fall off that 6,000 mark? You did mention that you will fall short, but by how much, if you could specify that for us?
So, rather the numbers, talk for themselves. It's a matter of, couple of weeks. So I don't want to predict any particular number, but I go with your judgment that we'll cross or very comfortably achieve the pre-sales. But, in the collections, we'll probably be better than previous year, but not achieving 6,000 crores.
I'll tell you something that what it overall does is, if your pre-sales cross, say, 12,000 crores and your collections don't touch 6,000 crores, say, end up at closer to some 5,000 crore odd mark itself. The collection efficiency of 60%, 10,000 and 6,000 crore, turns quickly south of 50% itself. So that was one of the concerns. But like you said, over a month or two, those collections would come by as well. But, from a fundamental standpoint, what we wanted to understand is that brokerages are now betting on the premium side of things in your business itself. If I remember correctly, Signature Global did start out as a mid-premium, affordable sort of company. What prompted you to shift to premium? Was it the lack of profitable opportunities there, or was it the supernormal growth that we saw in premium? What caused you to shift?
So I would say that, we have pivoted the model away from affordable because post the pandemic, the land prices went up and it was not very viable to do affordable housing business, which, we started with and basis which, the organization got set up. So, but, we've shifted out of affordable. We are not closing ourselves to any opportunity in times to come. But, I would say that as of today, we are coming up with mid-income products across the micro markets, we are working with. And we've really cemented our position in all these micro markets with fairly good, land situation, at all these three key micro markets. We are coming up with mid-income products. So in today's, even for this year, if you will see, let's say if we sell close to, let's say, 4,000 plus units with an average, unit price of close to, let's say, 2.5 odd crores per unit. I won't say that we are more towards premium. I would still say that, we are more of a mid-income housing player with, working across the price spectrum in the mid-income housing space.
Now, one of the factors might also be because there was no demand in the affordable housing space. Rajat, if you could corroborate that. And part two of my question being the fact that what about margins this time around? You're expecting to be around 35%. When do you see them progressing higher?
The affordable housing has not an issue of demand. It's like supply is constrained to a level that multiple players of our size can just keep operating in affordable housing space, and those homes will keep getting sold. So demand is of that quantum. So it's beyond your and mine imagination the number of affordable units which are needed. Point is that with the current land prices, and if you want to, and the current infrastructure status, if you want to give affordable housing units within city limits or just on the peripheral of city limits, the land prices do not support the kind of, end product price we've worked with for a long span of time, We used to sell homes for like 25, 30 lakhs for almost like 5 to 6 years. We've done close to 20,000 such housing units. But with the current land prices within Gurugram, we can't afford to do it anymore. So it's unaffordable for us, very much affordable for endless number of customers which are there. So that's why, that's the reason we've pivoted to, mid-income homes. As far as margins are concerned, we will enjoy very healthy margins on whatever pre-sales are being done. We are comfortable with, that 35% EBITDA margin, guidance which we've provided because our land inventory has come at a fairly good price. A lot of that land banking was done while, prices are not spiked. So we are very comfortable with those, margin numbers for this year or even for the coming year. We'll maintain that guidance.
Right, because, Nuvama does believe that you can be net cash by FY27 and your cash operating margins, which are currently at around 35%, can potentially reach 40%. So we just wanted to put on board their expectations and your, whether your reportage will be in line with their expectations or if you could exceed that as well. Finally, from a real estate company standpoint, the important part is what happens to the ongoing portfolio. You have about 11.2 million square feet of that. By when does that get launched? And what does your launch pipeline look like? This year, you had a target of close to around 16,000 crores. Will you manage to do that? And what have you set yourself up for FY26 and FY27?
So see, launch pipeline remains quite healthy. We are very focused in terms of the micro markets and even in terms of the ticket size, of the apartment, which we want to offer to our customers so that, while prices have gone up over the last couple of years, we've seen that price rise has moderated and, we want to offer products at a ticket size which becomes, affordable for the customer. So we are happy that, price rise in the market's not happening at the pace it was happening, in the previous 1 or 2 years. Rather, had it continued to rise at a steep pace, we would have also felt a little uncomfortable. So, given the market, prices should not, go up in a, little, I would say, steep manner. They've moderated quite a bit. In terms of our pipeline, we'll continue to come up with projects in our key markets, like on the Southern Peripheral Road and across the, Dwarka Expressway or the Sona Corridor. We have upcoming launches in each of these markets. We are yet to decide the quantum, which we'll do at the start of the coming financial year. So pipelines stays very robust, and since we are creating strong operating surplus, I agree with Nuwama that our operating surplus is almost inching closer to 40%. It was about 38% for the first 9 months, but with about 48% of operating surplus post taxes, there is room for us to consolidate further.
And this year you'll cross that 13,500 crore mark on launches, right?
We had crossed that within the first 9 months.
And where do you end?
We'll be in between 13.5 to 16 because we are doing some of the larger launches in the first quarter of the coming financial year.
Right, Rajat, thank you so much for sparing time, joining us this morning. Wish you good luck, and we hope to hear more numbers from you the next time we speak to you after your results. There's a management there of Signature Global. But as we wrap on this edition of Chartbusters, here is some good news for our viewers. India's business news leader is now just a click away, and that is the CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the App Store or the Google Play Store, or scan the QR code that comes up on your screen. That is the QR code. But with that, Manglam and I take your leave on Chartbusters. Thank you for watching. Trading Hour on the other side.